North American markets have experienced a notable downturn, with major indices such as the S&P/TSX Composite, Dow Jones Industrial Average, S&P 500, and Nasdaq Composite all recording significant losses. This decline marks the fourth consecutive day of market drops, reversing earlier gains due to escalating trade tensions between the United States and China. The White House's announcement of a 104% tariff on Chinese imports, effective at midnight, has heightened investor anxiety, prompting a flight to safe haven assets like gold, which rose by $16.60 to $2,991.10 an ounce. Conversely, crude oil and natural gas prices fell, reflecting a bearish outlook amid tariff uncertainties. The increased tariffs have raised fears of a potential economic slowdown, with concerns about disruptions to global supply chains and impacts on corporate earnings. This sentiment is mirrored in the bond market, where Treasury yields have fluctuated, signaling expectations of economic strength and inflationary pressures. Despite the turmoil, some green shoots suggest potential recovery, including declining U.S. Treasury yields, which may lead to lower borrowing costs and possible Federal Reserve rate cuts. Global markets have also reacted with volatility, as initial rallies in Asian and European markets were overshadowed by caution. Companies with extensive global supply chains, such as Ralph Lauren and Best Buy, have been particularly affected, while health insurers like Humana and United Health saw gains due to favorable Medicare Advantage payment announcements. Amid this backdrop, a report by the U.S. Chamber of Commerce Foundation indicates that many American companies plan to maintain or expand operations in China despite geopolitical risks. Overall, the market's instability underscores the sensitivity to geopolitical developments and the potential long-term implications for economic growth and investment strategies. As negotiations continue, particularly with South Korea and Japan, investors remain cautious, closely monitoring trade policies and their potential impact on global economic stability.
Palo Alto Networks Inc. has achieved a significant milestone by surpassing $1.5 billion in cumulative sales through the Google Cloud Marketplace as of April. This achievement underscores the growing demand for the company's AI-driven cybersecurity solutions, which are designed to enhance cloud and AI adoption securely. The collaboration with Alphabet Inc. As Google Cloud combines advanced AI and machine learning capabilities with Palo Alto's robust security platforms, offering a comprehensive suite of security solutions. This partnership is pivotal for organizations focusing on cloud-first strategies, as it helps them achieve digital innovation while managing associated risks. The market responded positively to this development, with Palo Alto's shares experiencing a brief surge in after-hours trading, reaching above $157 before stabilizing around $152.53. The company's recognition with 5 Google Cloud Partner of the Year awards further validates its leadership in AI and cybersecurity solutions. Analysts remain optimistic about Palo Alto's prospects, with Rosenblatt maintaining a buy rating and a price target of $235, while Truist Securities adjusted its target to $205. This strategic milestone and strong market reception highlight Palo Alto's pivotal role in the evolving landscape of cloud security driven by AI advancements.
Financial expert Dave Ramsey recently addressed a case on The Dave Ramsey Show involving Mark, an individual with a $125,000 annual salary who found himself burdened with $12,000 in credit card debt spread across 27 cards. Despite receiving a substantial $70,000 bonus, Mark reported having negligible savings, attributing his financial predicament to excessive spending on non-essential items, such as a $4,000 riding lawnmower. Ramsey's advice underscored the importance of financial discipline, recommending a 3-step plan: cease using credit cards, establish a stringent budget, and prioritize debt repayment using any surplus income. This situation highlights a broader issue affecting many Americans, as a recent Bankrate study revealed that approximately 48% of Americans carry credit card debt, With interest rates often exceeding 20%, the cost of maintaining such debt can escalate quickly if only minimum payments are made. Ramsey's approach, cutting credit card usage, budgeting, and focusing on debt reduction, aims to mitigate these risks and provide a pathway to financial stability, underscoring the critical need for effective money management strategies among high-income earners who may still struggle with debt.
British Finance Minister Rachel Reeves is set to engage in crisis talks with top executives from major companies like Hargreaves Lansdown, Legal & General, Lloyds Banking Group, and M&G, as reported by Sky News. This meeting aims to address the ongoing volatility in global financial markets, which has been exacerbated by recent tariff impositions. The discussions are part of a broader strategy to stabilize the economic environment and mitigate the impact of these tariffs on British businesses. The Finance Ministry has not provided additional comments on the report. The talks come amid heightened tensions following U.S. President Donald Trump's imposition of a 10% tariff on most imports from Britain, with a steeper 25% tariff targeting critical sectors such as automotive and steel. These tariffs have significant implications for the UK economy, potentially increasing costs for businesses and consumers while straining trade relations. Reeves' upcoming meeting with U.S. Treasury Secretary Scott Bessent underscores the UK's efforts to forge a new economic partnership with the U.S., aiming to alleviate the tariff burden and foster a more favorable trade environment. The outcome of these discussions could have substantial repercussions on market sentiment and the strategic direction of affected companies.
The Stock Exchange of Thailand, SET, experienced a significant downturn, plummeting to a 5-year low amid escalating global trade tensions. On Tuesday, the SET index fell nearly 6% to 1,059 points, driven by heightened volatility following the imposition of steep U.S. tariffs and subsequent retaliatory measures by China. This decline is part of a broader trend, with $10 trillion wiped from global equities, raising fears of an impending global recession. As the Thai market struggles to rebound, analysts cite ongoing risks, including potential retaliatory trade actions from Europe and a reluctance by the U.S. Federal Reserve to aggressively cut interest rates. In response to the volatility, the SET implemented temporary measures to stabilize the market, including a ban on short selling for most stocks and a reduction in trading bans. Despite these efforts, analysts from Krungsri Securities and Kiatnakin Infatra Securities warn that market volatility is likely to persist, influenced by global trade dynamics and domestic economic challenges. Kiatnakin Infatra Securities has revised its SET index target for 2025 down to 1,230 points, citing sluggish domestic recovery and international tax concerns. While there is some optimism due to cheap market valuations, the overall sentiment remains cautious, with potential government intervention anticipated if the index approaches the critical 1,000-point threshold.
The World Bank Group has approved a significant financing package totaling $1.1 billion to aid Jordan in bolstering its social and economic resilience amidst ongoing challenges. This financial support is allocated across 4 key projects aimed at enhancing living conditions in Jordan. The projects are strategically designed to drive inclusive growth and job creation, support startups and small to medium-sized enterprises, SMEs, extend social assistance, and promote a sustainable energy future. This move underscores the World Bank's commitment to fostering economic stability and growth in the region, especially in a country grappling with economic pressures. The package's focus on inclusive growth and job creation is particularly crucial, as it aligns with global trends emphasizing sustainable development and economic inclusivity. By supporting SMEs and startups, the World Bank aims to stimulate innovation and entrepreneurship, which are vital for economic diversification and resilience. Additionally, the emphasis on sustainable energy aligns with global efforts to transition towards greener economies, which could also reduce Jordan's energy import dependency. This funding initiative is expected to have a positive impact on Jordan's economic outlook by potentially improving employment rates and fostering a more robust economic environment.
Fortis Inc., a leading entity in the North American regulated electric and gas utility sector, will release its first quarter 2025 financial results on May 7, 2025. The company will host a teleconference and webcast on the same day, led by President and CEO David Hutchins and EVP and CFO Jocelyn Perry, to discuss the results. This event is significant for shareholders, analysts, and media, as it will offer detailed insights into Fortis's financial health and operational performance, following its 2024 revenue report of $12 billion and total assets of $73 billion. The teleconference will be accessible to stakeholders in Canada, the U.S., and internationally, providing a platform for direct engagement with the company's leadership. The outcomes could influence market sentiment and affect Fortis's stock performance, which is listed on both the Toronto Stock Exchange, TSX, and New York Stock Exchange, NYSE, under the symbol FTS. On May 8, 2025, Fortis will hold its annual meeting of shareholders, available both in person and online. This meeting will allow shareholders to engage with the company's strategic direction and governance, considering its extensive operations across 5 Canadian provinces, 10 U.S. states, and 3 Caribbean countries. These events, reflecting Fortis's commitment to accessibility and transparency, are expected to attract significant attention from the financial community, potentially impacting investor confidence and future investment decisions in the utility sector.
Lotus Technology Inc., a key player in the luxury electric vehicle market, has announced significant changes to its management team and board of directors, effective April 8, 2025. Daxu Wang has been appointed as the new Chief Financial Officer, CFO, succeeding Alexius Lee, who resigned for personal reasons but will remain on the board. Wang brings extensive experience from his previous roles at Radar Auto, Morgan Stanley Securities, and Citigroup, which is expected to enhance Lotus's financial strategies and operational excellence. Additionally, Catherine Kai has joined the board as an independent director. With over 30 years of investment banking experience at institutions such as UBS, Citigroup, and Bank of America Merrill Lynch, Kai is anticipated to strengthen the company's governance and strategic oversight. She will also serve on several key committees, contributing to corporate governance and decision-making. These leadership changes align with Lotus Technology's focus on expanding its presence in the luxury electric vehicle sector, with operations in the UK, EU, and China. The company is committed to advancing its research and development capabilities in next-generation automobility technologies, including electrification and digitalization. Market observers are closely watching how these appointments will impact Lotus's strategic initiatives and financial performance, especially with the upcoming release of its unaudited financial results for Q4 and the full year of 2024. The proactive governance adjustments are expected to positively influence investor sentiment, reflecting a commitment to robust leadership and strategic alignment in a competitive market landscape.
ST Microelectronics, a leading global semiconductor company, has announced an update to the agenda for its 2025 Annual General Meeting, AGM, of shareholders, scheduled for May 28 in Amsterdam. The Supervisory Board has proposed the nomination of Simonetta Acri as a new member of the board for a 3-year term, concluding after the 2028 AGM. This move is part of the company's ongoing efforts to strengthen its governance as it continues to innovate in the semiconductor industry, serving a wide range of electronic applications. The AGM will also address another upcoming vacancy on the Supervisory Board, with the selection process currently underway. This development comes as ST Microelectronics continues to focus on sustainable growth, aiming for carbon neutrality by 2027 and maintaining its commitment to renewable energy. The company's strategic direction and governance enhancements are closely watched by investors, reflecting its role in enabling smarter mobility, efficient energy management, and the deployment of autonomous cloud-connected devices.
Encore Capital Group, Incorporated, in a leading international specialty finance company headquartered in San Diego, will release its first quarter 2025 after market close. The company, which is publicly traded on the Nasdaq under the ticker ECPG and included in indices like the Russell 2000 and S&P Small Cap 600, specializes in purchasing consumer receivables from major financial institutions and utility providers, offering debt recovery solutions while emphasizing consumer rights through its unique Consumer Bill of Rights. The announcement will be accompanied by a conference call and presentation featuring CEO Ashish Masih and CFO Thomas Hernandez, accessible via live webcast on Encore's Investor Relations page, with a replay available afterward. This event is crucial for investors and analysts as it will provide insights into Encore's financial health and operational performance, especially following a strong 2024, where the company achieved a record $1.35 billion in global portfolio purchases and a 16% increase in global collections, totaling $2.16 billion. The upcoming financial disclosure is expected to influence market sentiment and investor strategies within the specialty finance sector, highlighting Encore's market positioning and strategic direction amid dynamic economic conditions.